are welcome to my channel. In today's lecture, I'm going to explain incomplete records in accounting with examples. And please like this video and subscribe to my YouTube channel. Incomplete records. Incomplete records, also known as single entry, is a situation where an entity or business owner did not keep the complete books of accounts known as books of original entries and ledger. The records may have been kept in single or incomplete accounts. For an entity to keep a complete accounting records, it must have worked with the following cash book, day books, ledger. You know now that for a company or a business to operate, it must have all these things with it, recording all the activities, all the financial activities of that business. But when you don't have it with you, it means that the recordings are incomplete. So a business entity may not have kept complete record of its financial events, but some books may have been available where all the financial transactions are recorded. Maybe the owner of the business might use some books to just record daily activities, daily receipts and payments, just like that. Because the owner is not an accountant, he can just record it that yes, after all, I sold goods worth of 10,000 naira today, and maybe he recorded 10,000 naira. Somebody is owing me 15,000 naira. He recorded it in a book, but it was somehow incomplete because he doesn't have all the books that are supposed to do the complete recording. So the owner might have recorded some of his transactions in the cash book, sales and purchase book, or personal accounts of debtors and creditors, just like I've just said, debtors and creditors, recording some of his transactions in it. Now, severally, they may not have kept any record of accounts as regards their business. Double entry rules were disobeyed or not kept because the owner of the business didn't keep the complete records of all his financial transactions. It means he disobeyed the double entry rules. He didn't record it under debit and credit as it's supposed to be. Now, the business owner may only remember his accounting transactions and balances with his suppliers and customers. Every other business records are not kept. He can only remember maybe somebody supplied him goods of 2 million naira, and my customer is owing me the sum of 150,000 naira. He can only record and keep that. He didn't do the complete recording as it's supposed to be in accounts. He's only counting on his profits to ascertain the growth of the business. At the end of the day, what he does is, I started with 5,000 naira, and today, at the end of the year, at the end of the financial or accounting year, he was able to see that my business has increased to 15,000 naira. Maybe he started a business with say 1 million naira. At the end of the year, financial year, after calculating all the money or the profit or everything, he found out that the business has increased. But if the business did not increase after calculating his money, it means that he has failed. He feels that he has failed. So he is only counting on his profit to ascertain the growth of the business. The net worth determines the profit of the business through the two accounting periods. Accounting periods I mean here is the beginning of the business and the end of the year. That is, if the business starts at the beginning of the year, maybe 1st January 2020, and then at the end of the year by the 31st December 2020. That is the two accounting periods I'm talking of. That time will determine on his own as somebody who is not an accountant. It will determine for her, maybe after counting or checking all his profit, it say that I've made profit of this and that. So alternatively, another accounting record can be provided to deliver some information. This would have been done successfully with the double entry system. In these figures that the figures that were available will be used to determine the figures that are not available. Do you understand what I mean? In this, the figures that were available will be used to determine the figures that are not available, which means whatever information or figure the owner of the business gave to the accountant, that is what he will use to determine the real figures or the profit or the loss the owner of the business made at the end of the year. Incomplete records or single entry is normally seen in our local or traditional business methods, where traders may decide to keep records of their business by themselves. You see now, traders, sometimes they are afraid of employing an accountant to take care of their financial transactions. Some will say the accountants will steal my money. Some will say I don't have money to pay the accountant. Some will decide to say, no, let me just put it down on my own. I can do it. So these are some reasons why some people don't even value or seem to employ an accountant for them to be recording their business transactions. So many a time you can see all these things in our traditional or local business settings. So when you talk of this, normally it is more of in our local and traditional business methods. Someone starts up a business with a sum capital of 1 million naira cash and stock in say 1st January 2022, and by this 31st December 2022 her capital has increased to 1,500,000. The conclusion will be that her capital has increased, but if the capital decreases, the conclusion will be that she has failed. It means maybe the owner of the business or the traditional in the traditional settings of our local business, somebody invested or started a business with 1 million naira, and he is just or she is just recording it. At the end of the day, you find out that the business has increased. At the end of the year, financial year, which is from January to December, or 1 year, just 1 year, the business has increased by 500,000. You will say that yes, my business is booming, my business has increased, my capital has increased. But after checking it at the end of the year, the business did not increase. It means that the business, she will feel that the business has failed. So now let me show you some workings on how to determine the profit of a business in incomplete records with an illustration. What is important here is knowing how to do the double entry. Since the owner of the business is unable to do the double entry, it is very important in business. Whatever we are doing, double entry is very important for you to ascertain the true profit or loss of a business. That is the major thing, because the owner of this business didn't do any double entry, which is needed in accounts. So let me just give you an illustration here. Mrs. Ugodia started a business but did not keep proper books of accounts. She managed to provide the following information as her balances. Now, this is January 1st, 2021. This is what he gave her. And there at the end of the year, that January, at the end of that 2021, which is December 31st, 2021, this is another information she brought for the business. You can now see debtors or receivables, 250,000. furnitures 11,000, creditors 50,000, stock in trade 150,000, cash in hand 350. Then by December 2021, this is what she was able to make. The same debtors 320,000, furnitures and fittings 15,000, creditors 70,000, stock in trade 170,000, cash in hand 450,000. You are required to prepare Mrs. Ugodia's statement of affairs and determine her profit for the year. Now the solution. Statement of affairs as at 1st January 2021. That is the information Mrs. Ugodie gave us. With this now, we can determine how he traded on her business for the year. Now he said debtors 250,000, stock in trade 150,000, furniture 11,000, cash in hand 350,000. Creditors, knowing fully well that this is her assets, which should be here. From here to here is assets. It should be posted on this side. This is her asset now. Then creditors should go to the other side because this is a liability. That is why you can see him posting it here. Creditors here. Capital is a liability. So you can see debtors 250,000, stock in trade 150,000, furniture 11,000, cash in hand 350,000. Now her creditors, like he said, creditors as of January is 50,000 naira. So now what do? How do you get the capital of this thing? You add it up. You can see it from here to here. I added it. It gave me this amount, and then you have to deduct that her liability from the business, which is 50,000. When you deduct 50,000 from this 761,000, it will give you 711,000 naira. Remember that in all double entry, this side and this side must be equal. So you can see it. If you add up this side, it will give you 761,000. Add this one, you can get 761,000. So on this now, you can see that her capital for the year is 711,000. That's her capital for the year. Now, statement of affairs for the year. For the year ended 31st 12, that is 31st of December 2021. How do we do it now? Stock in trade is 170,000. Debtors is 320,000. Furniture is 15,000. Cash in hand 450,000. Creditors is 70,000. Then her capital, just like I've said before, you add it up from here to here, which is this figure 955,000, and then less creditors, her creditors for the year, for by the time he gave us this figure, which is by December, is 70,000. Even her creditors has increased to 70,000 minus this figure will give you 885,000 naira. 885,000 naira is now the capital of this business. From the information she gave us, you can see that the capital now is 885,000 naira, going from her information, the information given to us. Now, note you can still use journal proper and or even statement of account to still arrive at the same figure, but with time I would equally teach you on how to do that. Now we got to do the profit statement as at 31st December 2021. How do we calculate it? The capital as at December 2021 is 885,000 naira. You can see it here. By December, 885,000 285,000 naira. You got to deduct it from the capital, starting capital, the capital we got when at the initial, that is the time she started this business, is this 711,000. So when you deduct this amount, the initial capital from the present capital, the first capital, which is by January 2021, and then the last capital, which is by December 2021, which is 885,000. What do you get? Capital at this as at December 12, 2021 is 885,000 naira. Less capital at 1st January 2021, which is 711,000 naira. You get 174,000 naira. This is apparent profit. Why do we call it apparent profit? Because I say I have written apparent profit is used here because the profit was determined by mere estimation. It was by mere estimation because we don't have all the real books of entry for us to calculate the real amount or the true capital or losses of the business. So but going by this, you can see that yes, she made some profit of 174,000 naira.